Well, this morning we had some weekly export sales numbers that came out. I'm Arlen Bowling with you, and let's review those numbers in case you missed them earlier this morning. We had a very strong number on the corn this time around. You combine this marketing year and next year, and you had a total of 2.7 million tons that were sold. That was a pretty big number. Soybeans came in at 1.45 million tons that were sold, and the wheat above expectations at 650,600 tons. All in all, pretty sizable report here for the weekly export sales. We had an overnight sale too. It was a little bit of soybean oil, actually a fairly sizable amount of the oil. It was sold to India, 20,000 tons of it that was sold to India. The markets have perked up after these numbers came out here. We've been in a bit of a selling spree here for better part of a couple of weeks on the grains, and things starting to look a little more lively. We have March corn with these quotes provided by Bar Chart now for higher at 5.89 3/4. We're a penny from our high of the day. Nearbys are leading the strength in the corn. On the soybean market right now, you have the January 14 1/4 higher at 12.76 3/4, while the March is up 12 1/4. It's at 12.77 1/2 right now. Well, in the soy products, on the soybean meal, which has been leading the charge in the spread against the oil, right now March is down 30 cents at 368.70 per ton. On the soybean oil market, you now have the March 139 points higher at 54.90 per hundredweight, so they have really been evening out that spread here the last couple of days. Now to the wheat in Chicago, you have the March contract 11 3/4 higher this morning at 767 3/4, gaining back some of what they've been losing recently. Remember, we gave up over $1 here the last few weeks. March KC wheat now 13 1/2 higher at 7.99. It poked its head above $8 and then fell back below it momentarily. March spring wheat 14 1/4 higher at 10.23 1/2. Let's go to Ted Seifried of Zaner Ag Hedge in Chicago. A little more enthusiasm in the grain markets here today, Ted. Haven't seen that for quite a while. What's spurring that on?
Yeah, I mean, it's nice to see. The recovery in wheat has a lot to do with it. It felt like the row crops wanted to go higher yesterday. We certainly were when we started the day, but then wheat was really heavy all day long. That dragged corn down, and then soybeans eventually came down too, but popped up at the end of the day. The fact that wheat higher is allowing the row crops to go higher. Soybeans in particular want to go higher, and it's because the soybean oil is doing really well. As you mentioned, a really nice sale to India this morning. But with that, soybean meal is not down sharply, and soybean meal is at much higher elevated levels than it was a couple weeks ago. And with soybean oil recovering, now you've got the products, you've got the value, you've got that crush margin really improving the last couple of days. And that means soybeans should go higher too. Now you have soybeans on the verge of an upside breakout that could look really interesting through a thinly traded holiday session if it were to occur. You've had corn on the verge of that same upside breakout, breaking major technical resistance. Now we're not quite there. Yesterday's high was it. So we need to get up and over and close up and over yesterday's high in corn to really pave the way for that. But the price action, the way this feels, it feels like we're going to do that. Every time we try to push and keep these things down, we come snapping back the next day. Wheat's the one fly in the ointment, but if that was just the low in wheat, then things are going to feel good. And you got to say, there was probably some pretty significant damage done to our wheat crop in the last 24 hours with the wind that we've had. I was really not sure why we were under so much pressure yesterday.
Yeah, that's absolutely right. And we're starting to see some photos of some of the wheat out there in the plains that just literally got sandblasted yesterday. It doesn't look very good. Hopefully we can start sharing some of those here in the broadcast. But crazy scenario out in the plains yesterday due to all the high wind and fire damage too on pasture land areas. We'll come back in a moment here, Ted, and we'll take a look at the cattle and the hog markets here on a Thursday right after this. We are back with Ted Seifried of Zaner Ag Hedge. We're going to change focus. We're going to take a look at our livestock trade and on the cattle. We had some weekly export sales numbers on the beef and the pork that were pretty good this time around here, Ted. Let's see if they're able to help out the futures. Now, keep in mind, the cash cattle market has been pretty weak here lately. Let's see what the live cattle trade is doing today. Right now, we're kind of mixed, but mainly lower. That December that's going to be going off the board soon is just one tick higher, but February is down 30 cents. We're at 136.27. It had been higher at one point. It had gotten as high as 136.95, but fell back away from that. April now down 52 cents. It's at 140.40 per hundredweight. On the feeder cattle side of things, we have the January down $1.32 at 162.10. March down 60 at 163.87. On the lean hog trade, well, here we go. We have these trading higher. February up 90 at 80.22. April 65 higher at 84.85. So the hog trade ignoring what's going on in the beef markets or the cattle markets today. How come, Ted?
Yeah, I mean, there's not really much going on in the cattle markets. Obviously, feeders don't love that corn is higher. And, look, corn, I think the feeders really wanted to see corn extend lower after yesterday. It didn't happen. So the feeder cattle down just a little bit. Cattle are just sideways. I'm actually pretty impressed with how well the cattle are holding up with cash cooling off. That being said, I think cash will heat up again. Packers margins are still really very good. I think there's room to go higher for them to pay higher in the cash market. So I'm optimistic about that. But the hog, hey, look, that's good. We saw some, as you pointed out, pretty decent export sales. Now, the one caveat to that is we didn't see China in there in a big way. The big buyer was Mexico. But hey, they're our biggest trading partner for hogs, so it's great to see them on there. I think hogs still have more upside to go. I feel like hogs had gotten undervalued, and I think we need to be up into the mid to upper 80s, maybe even lower 90s. I really like the long-term bottoming, inverse head and shoulders formation, multi-month bottoming formation that we have in hogs. I think there's upside potential. The question really is how much trade are we going to have during the next couple of weeks in a normally thinly traded holiday season?
All right. Well, good information. Thank you, Ted. Appreciate that very much. Ted Seifried of Zaner Ag Hedge with us here this morning. Janet, back to you.